Anant, you're using IPO proceeds primarily for cloud infrastructure and your R&D. What is the kind of revenue growth potential that you're seeing post these investments, and when do you start to see these investments unlock in the coming years?
Yeah, so if you look at over the last few years, the business has been having a good growth as well as increase in our EBITDAs. If you look at H1 this year, and we filed numbers for the September quarter versus H1 last year. There's a 25% top line growth and about 300 basis point improvements on EBITDA, as well as the business generated about 55 crores of cash in H1, which is equal to what the business generated in the last 2 years. So we feel that business is on a good trajectory, and these are the same underlying principles that are continuing for the growth ahead.
All right. How does the declining customer acquisition cost strengthen operating leverage? Because overall, that's going to support in the long-term margin expansion as well. Is the downward trend going to continue, or do you see that reversing?
Right. So in terms of new customer acquisition, we target the Fortune 500 or the Fortune 2000, the very large businesses around the world. So a lot of our leads or prospective conversations come from analysts like Forrester or system integrators or consultants, and that number has stayed pretty at the same number for the last few years now. And our teams are scaled to kind of deal with that volume of inquiries, right? So going forward, you will see our sales and marketing costs grow a little bit, more inflationary and probably what you've seen between last year to this year. But as a percentage of revenue, it should stay where it is today or see a similar trend, which is a declining trend, as you can see in the last few years.
Got it. Aneesh, one last question. With improving profitability and expanding your new annual contract value, what is the long-term growth outlook in the automation and customer engagement space that you're looking at?
Right. So if you look at loyalty and customer engagement as a space, the space has been growing at roughly about 10% year on year. If you look at our growth over the last few years, we've grown at 25%. Plus, half over half or year over year in that sense. A large part of our growth, like you pointed out, comes from existing customers growing with us, what we call as net retention rate. So our existing customers grow about 15 to 20% annually with us, and that helps with the growing contract values as well. So I think we'll continue to, between this and the new customer acquisition and M&A, which is a good growth vector for us, we'll continue to deliver similar growth as we've delivered in the last year and a half.
All right, Aneesh, thank you so much for giving us those details. To both of you and to the entire team, all the best. We'll of course look forward to speak with you once your Q2 numbers are out. But thank you so much for taking all the time and speaking with us at NDTV Profit.